You've spent your entire life working hard, building up that pension pot for a comfortable retirement. But what if I told you that without a smart plan, the taxman could snatch as much as 40% of it? Don't worry, today we're going to show you exactly how to stop that from happening.
And to make sure we get this absolutely spot on, this entire guide comes straight from the experts over at My Tax Accountant. They've laid out the roadmap to help you navigate the system and protect your hard-earned retirement income.
I know, it sounds shocking, doesn't it? But yes, losing 40 pence of every pound you withdraw is a very real possibility once you hit certain income levels. The good news? It's almost always completely avoidable. You just need to know the rules of the game.
All right, so let's get into it. Here's our game plan. We'll start with the absolute ground rules. Then we'll look at the biggest tax-free tool in your arsenal. After that, we'll cover smart ways to take your money out, how to use other income sources, and even some pro tips for your legacy. Think of this as your personal toolkit for a tax-free retirement.
First things first. Before we can start using any clever strategies, we need to understand the landscape. Getting a solid grip on these basic rules is absolutely crucial. It's the foundation for everything else we're going to talk about.
So, if there's one number you remember from today, make it this one. 12,570 pounds. That's your personal allowance for the 2025-26 tax year. It's the amount of money you can get from all your income sources before you have to pay a single penny of tax. Everything starts here.
Okay, so what happens once your income goes past that magic number? Well, it starts getting taxed in these bands. Anything above your allowance up to about 50,000 pounds gets hit with a 20% tax. But here's the danger zone. The moment your total income tips over that 50,000-pound mark, every pound after that is taxed at a whopping 40%. It's a huge jump, and that's the cliff edge we want to avoid.
And here's a little pro tip that catches so many people out. Your state pension. It feels like it should be tax-free, right? It's paid to you without tax being taken off, but, and this is a big but, it still uses up your personal allowance. You know, the average state pension is around £10,500 a year. That eats up most of your £12,570 allowance before you've even touched your private pension.
Right, let's build on that. Now that we know the rules, let's open that toolkit we talked about. And the first and honestly the most powerful tool you have is your tax-free cash. Now this is really interesting. If you've got what's called a defined contribution pension, which is the most common type where you have a pot of money, the rules say you can take a quarter of it, 25%, completely and utterly tax-free. The other 75% is taxable, just like any other income. This is a massive perk, but how you take that tax-free cash is super important.
And this really shows you the two main ways you can play it. Option 1, take the whole 25% out in one go. It's simple, quick, you get the money straight away. But the smarter move for a lot of people is to take it in stages. It's called phased withdrawal. This way, every time you take some money out, a quarter of that withdrawal is tax-free. It gives you incredible control to manage your income each year and keep yourself out of those higher tax bands.
Okay, let's look at the next step. This is where we really move from theory into practice. It's all about taking these tools and rules and actually crafting a real-life tax-efficient income stream that works for you.
Let's make this crystal clear with an example. So, meet Alex. He's a 60-year-old freelance consultant living in London, and this year he needs £25,000 to live on. How does he get it without paying any tax? Simple. First, he takes £12,570 from the taxable part of his pension. That's completely covered by his personal allowance, so no tax due. Then, for the extra £12,430 he needs, he just takes that from his 25% tax-free pot. And there you have it. He's got his full £25,000 for the year, and his tax bill is zero. That is smart planning in action.
Okay, stay with me on this next one because it might surprise you. It's a really common trap, and it catches out thousands and thousands of new retirees every single year, right when they make their very first withdrawal.
It's the dreaded emergency tax. Basically, the first time you take money out, HMRC often assumes you're going to take that same amount every month of the year and taxes you accordingly. It can lead to a massive, unexpected tax bill right at the start. Now, don't panic. You can claim it all back. But here's a little pro tip. Think about making your very first withdrawal a tiny one, maybe just £100. That triggers the system, gets you the right tax code, and then you can take out larger sums without the hassle.
But that's not all, and here's where most people really go wrong. They see their pension as their one and only source of income in retirement. And let me tell you, just relying on your pension is a huge missed opportunity when it comes to being tax efficient.
Just take a look at this. This is what a really well-planned retirement income looks like. It's a mix. See how you only draw down just enough from the pension to use up your personal allowance, that's the £12,570. For the rest of the money you need, you turn to other places. And the hero of the story here is your ISA. Any money you take out of an ISA is always 100% tax-free. It's the perfect partner for your pension.
So, the crucial point here is to use every single allowance you've got. On top of your ISA, you can also earn up to £1,000 in savings interest tax-free, and you can get another £1,000 from dividends, also tax-free. When you start layering these things on top of each other, your pension, your ISA, your other allowances, you can build a really solid tax-proof income stream.
Okay, let's get into some next-level planning. This is the kind of stuff that can make a huge difference, not just for you, but for your family down the line. We need to talk about what happens to your pension after you're gone.
This is honestly one of the most powerful and often overlooked perks of a pension. Your pension pot is normally completely outside of your estate for inheritance tax purposes, and the rules are amazing. If you pass away before you turn 75, your family can usually inherit the entire pension pot, 100% tax-free. If you're 75 or over, they still get it, they just have to pay income tax when they take money out. This makes a pension one of the best ways to pass on your wealth.
Okay, wow, we have covered a lot of ground. So let's bring it all together. Let's create a simple, actionable checklist, a summary of all the key tools from our toolkit today.
Right, let's quickly run through it. Number 1, plan your withdrawals to keep your taxable income under that $12,570 personal allowance. Number 2, use your 25% tax-free cash wisely. Don't just take it all at once if you don't need it. 3, layer your income. ISAs are your best friend here. 4, avoid those big one-off withdrawals that can push you into a higher tax band by accident. 5, look out for that emergency tax on your first go. And finally, 6, if you're married or in a partnership, plan together. 2 allowances are so much better than 1.
So, after all of that, it really just comes down to one simple question you need to ask yourself. Looking at your own circumstances, is your retirement plan really as tax efficient as it could be? Or are you leaving money on the table for the tax man?
Because, getting this right isn't about saving a few quid here and there. We're talking about saving thousands, maybe even tens of thousands of pounds over your retirement. And since everyone's situation is unique, getting professional help to build a plan just for you is always a good idea.
The team at My Tax Accountant live and breathe this stuff every single day. If you want a personalized strategy to make your retirement as tax efficient as possible, you can reach them directly. You can WhatsApp them or call on 07854 255 375, or just drop an email to info@mytaxaccountant.co.uk. And for more great guides just like this one, make sure you hit subscribe on their YouTube channel. Thanks for joining us.